Good morning and welcome back to the Opportunistic Trader for January 28th, a Monday, a Super Bowl earnings week and a Super Bowl weekend. So it should be an exciting one. Cat kicked us off this morning with earnings that were a little bit light. Stock was down about 6% pre-market. Sort of coming back into the range where it was, maybe a little bit lower. S&Ps are down 16 this morning, still having an unbelievable month. NASDAQ down 60 basis points. Germany down 37 bips. Last night, Asia started out a little bit firmer. China ended flat. Nikkei ended down slightly. Overall volatility is back up to 1873 on the cash. Futures are a little bit lower than that. It's interesting to me. Each time we go down a little bit, they take up volatility. So if we ever really had a down 50, 60 day, we would be back to 25 vol in no time. Overall, at the Opportunistic Trader, we have no position. We've been whipped around. We want to make sure that we're giving trades that are going to work, which is hard to do. The tape has been difficult to say the least. Today, oil is down $1, I guess, in sympathy to the S&P down move I saw last night. It was kind of flat as the S&P was flat, and as the S&P went lower, oil went lower, still also having a big up month. The outlier is nat gas, which is the craziest thing. It's back to $2.90 pretty much, and in the second month it's $2.87, which is actually lower than where the move really even started from. I remember when Mark Fisher was on talking to us, nat gas was almost $3, and he caught that move before it exploded. But a lot of that move was basically to exit out one guy's position, and I don't know how they can pull that, but I guess everyone knew the guy's position. They ramped the market up, took the guy out of the positions, and then the market came back in. Maybe that should have never happened, but because the excuses they came up with never came to reality. But they took the guy out. And what else is going on? Other than that, currencies are a little bit mixed. Dollar is sort of in the same place. It actually, on the euro, traded down to 112.80, and now it's back to 114 and change, so that reversed. But overall, looking at stocks, they're pretty much all in line. Apple down a couple of bucks. Apple is tomorrow. Should be interesting. The sentiment is very negative. We do think they probably will make earnings, but lower expectations, and I think they have a big problem. But again, we'll see the earnings tomorrow. I know Amazon is later this week, and Exxon, and about 10 other names. But overall, markets are lower. Nothing looking too crazy. Down 15 on the SPY, 43 on the NASDAQ. It's funny, I mentioned Bitcoin on Friday that I wanted to discuss it. It's actually breaking lower. It hasn't broken the low of about 3,200, but it's coming into 3,400, and it should break below 3,000 here, and we'll see what happens if there's an acceleration and people having to sell. But again, you have a product that you're producing something, and you have to sell the coins every day, and really the public has zero interest in this now. So I don't know how low that'll go. And I'm joined by Vince and Mike. Vince, I just want to go over your macro thoughts. Thanks for joining me this morning.
Thank you for having me. I think I just want to add some other events so people can jot these down, because there's a lot of different things going on. To your comment and Michael's coining of the phrase Super Bowl week for in more ways than one. First of all, on earnings, to add to what you already said, we have, oh boy, I've got various stuff going on here. All right, we've got, well, first of all, This week we've got the FOMC PAL press conference, which would be an extension of the Friday QT back off rumor that kind of played havoc with currencies and metals. We've got a Brexit Plan B, Plan B, U.S.-China trade talks, which I'll go into that in a second, U.S. January payrolls, global PMIs and GDPs, and 26 backlogged events. And it is the busiest week of the earnings season, as you implied. For example, today, as you already commented, Caterpillar's out, AK Steel, Crane, Ethan Allen, Graco, Integrated Devices, Rambus Reinsurance, Sanmina, and Whirlpool are all out. Not stocks that we typically actively trade, but certainly they could affect industries that we watch. Integrated Devices might have an effect on Micron, which is one of the companies that you like to look at. And the final thing I wanted to throw out is maybe a little bit of a glide path of the trade talks or whatever they are. Vice Premier Liu He is flying into the U.S. this Monday. I guess that's a good thing, considering the FAA was complaining that we wouldn't be able to be taking jets. He meets Lighthizer and Mnuchin on Wednesday and Thursday. If there is no deal by March 1st, the trade war could escalate, and that would mean that the U.S. could raise tariffs on imports to that 25% from 10% that Trump has had in his pocket. So I would say that your event risk is big today. You're a headline risk. I mean, this week, between the FOMC, between anything that comes out of the China conversations, and of course, earnings itself. So there's a lot of, I'm hoping this is a very good day traders week. And by that, I mean, I'd like to have all that information come out at the same time to create a nice, whippy, volatile market and give us some trades. But there's a lot to look for, and you should keep your powder dry now, and you should get ready to fire during the week multiple times. That's my take on macro.
Yeah, I just posted in the chat the earnings, the big names for the week. And today's the slower day, but we got Caterpillar, which is always seen as a sign of global manufacturing growth, and they're down 6%, and not their guidance was the issue. So, but if you take a look tomorrow, we have Pfizer, Apple, then on Wednesday, AT&T, Microsoft, Tesla, Facebook, PayPal. Then Thursday, one of Larry's favorites, GE comes out, Amazon. So we have big week for earnings, and those are just the major names. There's a lot of other ones, and then, as you said, Fed this week, more from Brexit, and a lot of economic data that was backlog coming out.
One thing I'd like to add before Larry continues, it's not a macro statement, but I think it's a macro view from a very important company, Facebook, that is included in the sectors with earnings coming out. For as much as Facebook has dropped, I noticed that Zuckerberg said something last week, and this is my impression of what he said. They're going to be consolidating or integrating Messenger, Instagram, what have you, all these ancillary products into one. And I think that's a fight back to, in my opinion, a little bit conspiratorially speaking, to obscure the fake accounts. If you have multiple accounts and you aggregate them all, it's a lot harder to find things like that. My point is, after thinking about that, independently thinking about that, all on my own, and then reading a report by 13D, a company that's actually pretty good at coming up with rationales for trading. Facebook, as low as it has been, could be, I'm not saying I'm shorting it, could be a much bigger short if Zuckerberg doesn't get his act together, and if the board doesn't get their act together. And as a result, I might short it below 143. So there you have it. Facebook is far from out of the woods based on their behavior and their reactions to negative news. Anything, Larry?
No, I just think it'll be interesting to see these earnings and see what they look like. Again, Apple will be the most interesting one to me on the week, as well as Facebook. I cannot imagine how Facebook can make the numbers. I cannot imagine how they're going to be positive. Apple sort of the same, but a lot of these expectations have been lowered, and stocks are, it's interesting. The market's come all the way back, but these stocks are, they're way off the lows, but they're lower. Interestingly enough, Apple is 15 off the low, but it's 75 off the high. So it's definitely on the lows. Facebook is 60 off the high, or maybe 65, but it's 24 off the low. So a lot of these stocks are kind of mid-range. These earnings are critical. I do not see how they're going to be okay. Today will be interesting in general. One trend that I do see is that oil is following the S&P. Other than that, I can't make out a lot of these other trends. Bonds are kind of flat with the S&P down 16. You would think they would perform better. They whip back and forth.
What about this Caterpillar news? Is there any sector names or broader index? Would you sell the broader index based on this Caterpillar, or would you sell China? Anything you do based off of Caterpillar?
No. I think each one of these big conglomerates are separate amongst themselves. This could miss, and GE or someone else could make the numbers. I think every company is self-dependent, and what I talked about with a friend of mine who I always trade with is used to be when Intel would miss. I mean, you saw last week Intel missed a number. It was down like almost 10%, and every other chip stock was up, and the market was up huge. That would never happen. I remember sitting with a buddy of mine on the Morgan Stanley trading desk back in the day when that thing was a beast, and we were just sitting there, and all of a sudden Intel pre-announced, and the SPOOs were down like limit off of Intel. And this is going back into the 90s, but that's how much these stocks had an effect on basically the sector and the index as a whole. But now you could have IBM up or down 15 points in a day, which is more than 10%, and it doesn't have an impact on stocks. So really, it's more external news and stuff like that. And you could sort of see how these algorithms work. It's interesting. Last week they had this PS&G news, PCG, that they won a case for a fire that was like 4 years ago, and the stock went from $7 or $8 to $15, and they had to stop it from trading. And then they realized that wasn't even the case. That's really the one that's putting the company in jeopardy. I don't know where the stock is now, but it's definitely
$11.
It's definitely lower. It's down from almost 15 to 11, and I know it traded down to 10 something this morning. And basically, that case is going to be back in focus, and who knows what'll happen. But it's all an algorithm that's gone mad, and that's in a way the market. You can't get in the way.
If I could just throw in the PCG, I thought was kind of hilarious. The news came out that they weren't being held liable or responsible for a fire, and I wasn't sure which. It said a name that I didn't recognize, and PCG rallied, and then the next headline was, "Oh, but that's not going to stop them from filing Chapter 11 because this isn't the that we're worried about right now." And I went, "Oh, okay. So these guys have a lot more, junk on their plate than just one fire that they're worrying about."
What's funny actually about that? Sorry to jump in. The whole reason why some of the big hedge funds, and I'm not going to name names, that got involved in this 6 months ago, and then that big fire happened that crushed it, was they were expecting this sort of outcome from that, and they thought it was oversold. And they thought they'd get that outcome from this, but then there's that whole second fire from just the last 6 months that is what really crushed the stock from 50 down to 5.
Right.
So,
right.
There's a lot more to the story, but fascinating.
Yeah, and there's more to it because I think this company actually filed for bankruptcy once before, so this is like the second time out. But I don't know what'll happen on this. but it's just funny to me that the algorithm just picks up a word and just goes crazy. It would have brought the stock up to like $30 if they didn't halt it.
Well, that's why those automatic halts.
You speak of algorithms. That would be if we're going to just create names for them, that would be a headline algorithm. It read a headline and it bought it.
Yeah,
and it probably took the shorts along with it.
Well, and you know what? That algorithm could be right because it doesn't matter the price. If they can buy it at a price and sell it a little higher, that's all they're looking to do. And they see, there are also algorithms that see the orders and they see 500 buy orders and they run in front of the 500 buy orders. I mean,
that's true. I mean, to the point, there's a cliche that we all use, picking up pennies in front of steamrollers is really not a way to trade, but it is if you're an algorithm and you're milliseconds faster than the world, and that's what they do.
What about Larry? We got Apple coming out this week. Right now, Apple is trading 156.38. It looks like let's call it 155 calls or 550. The puts are about 275, so roughly about $8 on the straddle. Anything to do there, or the fact that they pre-released about a month ago? Is that taking all the juice out of it?
Well, I think a little of the juice, but in general, it's the stock moves $5. It moves $6 on Friday, so I would think that that's a buy, and I think you could make a lot of money by buying that straddle, and you could sell some upside calls that are out of the money. Way out of the money, bring in a little on that, and sell some puts that are way out of the money, bring a little in on that, and take your cost down to about $5, and I think you're pretty much okay. Vol is cheap in there. I think be interesting to hear what Tommy Mack has to say about that. I don't know if he was discussing it with you, Vince. If you guys got to Apple.
On the Q&A. He's on the Q&A. So why don't we just put it to him right now? He's complaining about fake news, and he's complaining about me spilling beer on the server this morning.
Tom's just angry. There was no football this weekend. He was angry about the tackling that was happening in the Pro Bowl, or the lack thereof.
Yeah. But no, seriously, Tom is the person to talk to about that. Take a Larry idea or a Larry concept and combine it with a Tom structure, and you could make a lot of money.
I know we had a member asking last week about downside. He was looking for downside in Apple and different ways and options to play it. And Tom responded to him at the time, but I'm going to remind that one to Tom to take a look at before earnings, downside opportunities utilizing options for Apple.
Dovetailing back to what Larry said, how once upon a time earnings were paramount to the broader market's move. And now more events or I guess rhetoric is dominant, and cash flows coming from the Fed are dominant. This makes for an interesting week, almost like a scientific experiment. When you look at all the earnings that are out, Larry, combined with all the Fed Chinese stuff that might be coming to a head, I got to wonder what's more important. I can imagine Apple having very negative earnings and the Fed saying, we're going to print money, and Apple just being unchanged with a $50 range. I just got to wonder what's going to win out, if anything, this week with very important earnings combined with potentially very important non-kick down the road can events.
Well, traditionally forgetting earnings on a last week of the month, when the month is very, very good, usually you see a little bit of selling. So it wouldn't shock me to see a little. You're seeing a little today. The month is up about 5% or maybe 6%, which is monster. And we'll see. The market has a very bullish tone. They want to buy it. They always do. So we'll see. But usually, traditionally, month end will be met with some selling. So we started this week at about 63. It wouldn't surprise me to come in another 20, 30, 40 handles and still have a month of up 3.5 to 4 or 5, saving a little bit more for next month. But I do think that we're going to have a full out dislocation this year, where the market's down 5 to 7% potentially in a day, maybe even more. I don't know how that's going to happen. I don't know when and if, but it just feels to me that it's funny. We as traders, and I'm sure you're the same way, and you're more commodity guys, so you probably have dealt with this forever and ever and ever. It's like figuring out what's limit down. Like if you asked every single person in the market right now what limit down in S&P is,
I have no idea.
Nobody would know.
I have no idea. I mean, is there a limit down anymore, or is
Yeah,
it a circuit breaker that slows it?
Yeah, no, there's limit down, but we've never been there.
Breaker. It would stop it until I believe 3.
Yeah. Whatever it is. No, it stays on the limit, I think, for a period of time, and then there's a second limit, and then there's a period where it stops.
As an options trader,
but whatever that may be, all I'm saying is nobody even thinks about that. No one cares about that. It's not even in anybody's mind. But I remember as a trader, the first thing we would do when we sat down in our chair, and this is coming into before '08, is, hey, I would say to the person trading with me, hey, what's limit down today? They go, oh, limit down is this. And we'd always think that there was a possibility to go limit down. And limit down is only, I think, 5% or less.
Right.
I think less. But that to me is the scariest part about the market, that nobody knows, nobody cares. It's never really happened. And you look at a day like today, and the VIX is back to 19. It was probably too low at 17.5, but it's back to almost 19 pre-open, and we're only down 67 basis points on the day, and volatility is up 10%.
It actually, that I know of, it's happened 2 times since the election. One time was the election night. We did get halted trading the future night. And the second time, last year when the VIX blew up, that night we halted trading.
We did?
Yep. Both those times, and might have been other times, but definitely both of those times.
Yeah, that's about it. Yeah.
And those were both overnight, as a matter of fact, so, it wasn't daytime.
Right, so those limits, I think, are less. I don't remember what that limit is, but
it's about 5%.
I'm going to make a prediction, but it's actually going to be on Larry's shoulders. For about a month, the last month of the year, or let's say the last 2 weeks of the year, there was definitely, as a person who watches this but doesn't trade it intraday as much as you do, Larry, there was definitely it was hard to pin down the relationship between VIX and stock moves, but I think it's back. And I think it's back because, and the story is always good for me to understand the reason, you have a new year. You've made a couple points. One point is that it's the end of the month. I would not be surprised if we sold off. You know what? If I'm a money manager who barely kept my job because of the Santa Claus rally after Mnuchin's conversation, I'd be happy to book some profits at the end of January too. When you combine that with what I have seen, and I may be wrong, but what I'm seeing is that the VIX is sticky when we rally, because I think, and I've actually looked into this, although volatility is coming in, the skew is getting more pronounced towards puts. So there are finally, and let's see how long this lasts, in a rallying market, people that are buying insurance when they can, not when they have to. And to your point, Larry, or to I hope what could be a trading point, is that the VIX is linked again to the stock market, even possibly even more than it should be, and could be a nice little indicator going forward for the next month once again as it recouples with stock movement. So my prediction is you're going to be hopping for the next 30 days if this VIX S&P relationship stays as robust as it's been for the last, say, 3 or 4 days. How's that for no pressure?
No, it makes sense, but I'm looking at the VIX. The SPOO took another little leg lower. It's down 20. See, these are the days that are really kind of interesting. So the day is down 20. Really nothing is happening here until we go down 40 or 35. This is just
now. Why do you pick that number? Is that where the straddle
just because it's an extension of the move here, and it's big enough to get people afraid. People are banking that the market doesn't go down 30 or 40. So
right.
Usually days like today, the market opens up, and you'll know within 10 or 15 minutes whether it's going to be one of those days for the most part. So right now it's looking it's looking kind of, iffy, but most likely they'll somehow save it. And
I think this last leg lower started. NVIDIA came in guidance and they're down 10%. So they traded down to about 125 now, then back up to 160 now.
Oh, they pre-announced.
So NVIDIA plunges after lowering revenue guidance.
Yeah, but can I tell you something? It's down 20 now. But the funny thing is, it's nowhere near the low. The low is 124. I mean, it's nowhere near the low, and really, the company is in deep, deep doo. It's in deep bad shape. I mean, come on. I mean, the whole mantra of that company was crypto, crypto, crypto. They spent all this money on expanding out crypto, and there is no crypto. Crypto is finished.
That's right. They actually are blaming China and crypto for their problems.
I was about to say
that's a spot on.
That is the one I wanted to. So just Caterpillar now NVIDIA technology. Manufacturing, definitely.
I mean, I would think that, I know on the whole way up they were saying crypto this, electronic car. It was crypto and electronic cars. I mean, it was like electric cars. You need NVIDIA, right. But yeah, then he killed the dog and named the new.
Did he really?
New one. Yeah, every day. What do you mean? You had to listen to that knucklehead every day. My dog is NVIDIA.
I only listen to him when I'm
now. Wait, now he's on right now as we bad mouthing NVIDIA.
I never knew a dog NVIDIA.
Right, I love NVIDIA. I mean, I don't like NVIDIA. It's going down. I mean, come on already.
Your money is completely safe in NVIDIA. They're being LBO'd by Bear Stearns.
I mean, this is. But the funny thing is, it's what we talked about before. It's the same thing that could happen in Apple. If Apple has a bad number tomorrow, it's going to go down 10. It's going to go down 8. Except the bottom line is that when it goes down 8 or 10,
right,
that it's nowhere near the low. Nowhere near the low. So
right.
NVIDIA is still going down. I have it up. It's down basically 19. It should be down 40, but obviously people are somehow or whatever buying it. My thought is, I mean, why isn't the stock 124 or 127 or in that area or even lower? If this happened when the stock was at 125, it would be 100. So it's just what they've done here is they've dislocated up stocks, okay? So that now when an NVIDIA misses, it goes down 20, and it's at 140 rather than 120. So that's what they've done. But this stock's got a lot of problems.
Can I just put this, because I'm just trying to wrap my head around this and create my own little bullet points based on what you're saying about stocks. Being a commodity guy and not really knowing how stocks operate. Tom, this is what I'm hearing from top to bottom. It's the end of the month. And I'm just trying to figure out how I want to play this. It's the end of the month. And if I'm a fund manager, I'm happy to book a profit. I would not be surprised at a 10, 20, 30, even 40 drop as we go into the last week of the month. But my footnote is that there's usually window dressing on the very last day. But to your point about Apple, we've had
well, I would agree with that, but I think it depends on the week. It depends on the week. The last day of the month, may not be to buy depending on how the week rolls.
No, I'm throwing data in there. These are thoughts I'm having, and I'm trying to come up with a thesis to trade it. And now I'm going to go to the Apple pivot to the Apple point. Apple, like many other stocks, although Apple is a different animal, for obvious reasons, have been rescued by this Mnuchin plunge protection team rally. On top of the fact that QT may be backing off. And so now what we have, I think, right, if I'm handicapping this right, we have a market that's handicapping the hope of easier money, the hope of trade easement, the hope of a continued backing off on a government shutdown, which leaves, as evidenced by NVIDIA, earnings to crush stocks. So I'm almost thinking no matter what the earnings are, they're going to be heavy. They're going to hurt stocks. and macro makes things bullish, and reality and fundamentals makes things bearish, which makes me think I want to be long Apple puts because even if they make earnings, it might not be good enough. That's just my first knee-jerk reaction to what's going on based on what you said. I'd like to sell rallies, but I'm scared of that end of the month window dressing. So I might be looking to buy a puts or a put spread in Apple. That might be something. That's just me thinking as an active trader, distilling your advice, your observations. So, what's the straddle today, by the way?
Interesting question.
Right? I bet you there's a big spread.
Where do you straddle?
Give Monday. On Monday. I'm just reading stuff. I read
14.5. It's not too big at all, actually.
Right. Which is kind of cool, Larry, right? Because we know it's a big week, right? But we know that the macro stuff doesn't happen until Wednesday, Thursday, with the Chinese stuff, and the Fed speaks later in the week. So today, you got a low straddle, but I bet you the next day straddle or the day after that is probably higher than that. I mean, I won't bet you, but I'm going to speculate that.
Yeah, definitely. I mean, more time. When you look at it, we're already down 24, and so the straddle being 14, it's real low. I'm just looking more at this NVIDIA. It's a pretty amazing, 14%.
Well, what's amazing about NVIDIA?
Today's straddle's a buy. Today's straddle is a buy in my mind because stuff tends to come out before it's supposed to come out. You know what I mean?
I don't know. I'm not
look,
sure
I know
about that.
Look, I know it's like making a deal with the devil for you to just be naked long options. I'm sorry.
No, listen to me. Okay. It's not. It's
I'm kidding. I'm kidding.
No, I know. I'm just saying I actually probably think it's okay. But what's interesting about NVIDIA, there's a couple of things. So NVIDIA is down 13%. So that's about $13 billion in market cap-ish. This is a $100 billion stock. Their revenue miss was only $500 million. So they miss revenue by 500, and the stock takes a hiccup of basically almost a quarter of its value. Or
hiccup is a nice word. I would use.
No, 100%. It's just funny to me because it was a miss, but it's a miss of $500 million, and they're still making 2.5 or 2.2 billion in the quarter. So I don't know. The whole thing, that, like you said, it's a high beta name, but it's an amazing thing. And the stock will probably be down. It's down 14%. It'll probably be down 20 to 25% on the day potentially once they get rolling here, because the stock should trade through the low at 125, 124. So those are numbers you can look at as 125. And if you look at the last time they had earnings, the bigger move in NVIDIA happened on the second and third day. So it may do the same thing. Off of earnings, it went down like $20, and the next day it went down like $50 when it was up in the 180s. I mean, in the 280s. So, the stock's amazing. It was 290 and it's trading 130. So
it's talking about excess inventory following current.
Is that what it said?
Quote.
Yeah.
Excess
there you
inventory.
go. There you go, doctor. And crypto has a long way to fall. Crypto hasn't even begun yet.
Can we pivot to crypto? I know you wanted to talk about that.
One thing I wanted to at the was at 8. I can 5,000 profitable business, and all of a sudden I can't.
Yeah, but my better question to ask you guys, because you're my crypto experts here, if it costs $5,000 to make a coin, which at one point they said break even was $7,000 or $6,000, okay, if it costs $5,000 or even $4,000 or even $3,500, Why would you mine a coin? It's costing you more money to mine the coin. Well, no, they already bought that. I'm talking about the people that have the equipment. I'm talking about people getting in the space. They're sitting there. They blew up because they expected the space to continue at the rate that it was continuing. It slowed and died to zero, which we all agree with. But what I'm asking you is, you're the guy in Miami who we know, or wherever he's mining these coins, okay? And he's sitting there with equipment that costs $3,900 in energy or $5,000 in energy for the week, to mine a coin. Why would you mine any coins? I would pull the plug on everything and sit there and
Can I give
wait.
you a straightforward answer?
Yeah, I would like to understand it.
Okay. Logically, what you're saying makes sense. Why would you? I mean, when you have a business like Bitcoin mining, which you can simply turn off your machines, kind of like these days, the way rigged counts don't matter as much because you can take them down and put them up a lot faster because of the way shale operates and fracking. If you pivot to Bitcoin and your cost of, let's say your cost all in is, let's say 4,000, right? And we're trading 3,500 now. Why you're not turning off your machines? Because you have either financial leverage or operating leverage. And if you're borrowing money, then your true cost might be 2,500 on a levered basis, and you have to keep producing. So, if you have operating leverage, your true cost, because of scalability, might be less than 5,000. But I think it varies greatly, and we're in a process right now, as you're kind of implying, that there are 1 million people out there mining coins, and most of them are not low-cost producers. And it's the low-cost producers, the bigger server farms, the lowest cost that end up winning. And I say this with a direct parallel to real mining. If you're mining gold, let's say in South Africa, your cost basis is $1,200. If you're mining gold in Canada, your cost basis is $1,000. And the difference is, your leverage, the money you borrow. And, it's kind of like the shale industry just went through. How are they making money? They're not. They're just treading water. So to your point, if I'm running a Bitcoin farm, I might be shutting down, and I'm working on leverage. And it's definitely, I'm producing coins below my cost. I'm going to cut my cost. Maybe I'll just fire some people and turn some servers off. But as a business, I have debt and cash flow that has to go towards debt service, which only means it prolongs the inefficient use of capital in these industries, which means
I still don't understand if you're turning your stuff on and it's costing you $5,000, why are you turning it on?
Who says that?
Well, you're talking about, but we're just
somebody is. They're mining coins every day. That's why there's trading.
We're talking about
there are people in there making coins. I don't. Maybe the real price, and Mike, you know this because we had the guy in our office, is 1,000. Maybe it was never 7,000. He claimed he was making coins for what? What was he saying?
The
cost has gone up because.
No, I get that, but what was the guy? He was saying he was nowhere near that cost, and
3 years ago or 2. He was saying dollars. I'm not going to say, but I think he was got up to.
And I remember that too.
But I thought the guy kept contacting us and saying that he could make the coins for way less, and it didn't really cost that or whatever. I mean, the guy.
But it went up. It went up.
That's the implications of what I'm saying. You have
1,500. Because you weren't able to mint as many. 2 years ago. Back then.
But hasn't he been claiming he's making a fortune of money?
I mean, this guy, I don't know.
I don't know either, but I'm just saying, through this whole
reliable source.
No, but they're claiming that they're still making money. So, but the point being, with Bitcoin going under 3,000 potentially and into 2,000s, I don't even understand the whole thing because they had to mint these coins at some point when the commodity was $1, when this thing was $1 or $3. What were they minting the coins for? 0? I mean, this thing was literally, if you look at Bitcoin, I think it was $3. We had like the highs and lows in the years. One of these years, it was like $3.
You buy a pizza with Bitcoin. Now you regret doing it. Um, yeah, I mean, I wouldn't call myself an expert, but I have followed it from a market structure perspective. And you're absolutely right. People did it because it was, I don't know, kind of a nerdy thing to do. That actually worked out. But you did want to talk about Bitcoin from a trading point of view too. And for what it's worth, and to your point of it going lower, for me as an active trader, if Bitcoin is trading 33.65, I have a signal that says be short it with, and this is a huge, do you want to take this kind of risk? With a 34.45 stop loss, we will, if below 34.45, it says we should continue lower for the next 3 or 4 days. And that's something I'd consider putting on. It could be a bottom, a big reversal, but for the next 1 to 3 days, below 34.45, I don't see anything stopping it from making new lows.
Well,
So
we had Tracy on last week, and I think it was last week, maybe it was 2 weeks ago, she nothing bullish about it, similar to what you
right.
had, downward past year, consolidation, nice triangle way.
Right.
Nothing.
And those of us who look at, say further out, to Tracy's point, I would love to be a buyer of Bitcoin, or put it this way, a cover of shorts in Bitcoin, if the market made a new low, but the RSI did not. And that's an old thing that people don't usually follow too much anymore. But that would be a negatively divergent or a non-confirmation low. Other than that, I'm just trading the volatility, which says we got more to go lower. Meanwhile, the business is being adapted more and more because it's low volatility. So I'd say mission accomplished by listing it.
Yeah. We'll keep an eye on Bitcoin. Right now, S&P is making a new low. We're only 6 minutes out. We started a little late today, so I want to wrap up. Mike, who's on the schedule today?
We're going to have Phil Flynn coming up at 10 o'clock talking about the markets, and then 12 o'clock we're going to Goldfish events, and we might.
Okay, so we'll see everybody in the chat, and good luck, everyone. Today should be a crazy active morning. NASDAQ futures down 100. So I guess NVIDIA is kicking in. Again, I just want to leave you with this thought. And again, each stock is individual, and there's always ways to pull rabbits out of the hat. But I'm not exactly sure how Apple is going to make the number with slowing in pretty much every sector, and the iPhone 10 is not selling, so it's going to be interesting how they pull it. Listen, they pulled it before, so be careful. The one that also looks interesting is Facebook to the negative. So these stocks look kind of negative, but again, they've thrown out a lot of negativity in the quarter, so we'll see. But anyway, good luck to everybody, and we'll be back after the opening.